morning and welcome to today's 5 with Fitch. The S&P 500 will put together a 7th straight winning month if the index can close higher today. This will be, if it happens, the single longest winning streak since December 2017 and critically, the S&P 500's 9th positive month in the past 10 months. Here's my plan. Point number 1, why energy and financials are at the top of my list right now. Many investors are caught between a rock and a proverbial hard place. COVID scared them out of the markets and they've never gotten back in. Now, many feared that the other shoe would drop, that the Fed would screw up, or the economy would choke. Yet the exact opposite is true. FOMO, fear of missing out, is next. Now, one of the great examples is JP Chase. I've highlighted that company and shared it with readers and viewers around the world since it was in the low 90s. It closed at $160 a share yesterday, up 60.14% year to date. It's still a great buy and still my favorite financial. Point number 2, slowing growth is only part of Zoom's problem. Just yesterday morning in yesterday's alert, I told you yet again that Zoom would likely put in good numbers, then drop as the reopening trade continues to fade. The only reason the damage is not worse after Zoom's reports is that the Delta variants are giving the stock support. Now, companies that help the world stay out are where you and your money want to be. Incidentally, Microsoft's Teams present a very serious challenge to Zoom, and not for nothing, I think Microsoft is a far better stock. Point number 3, Hoodwinked. You cannot claim you're surprised. Robinhood stock is dropping as the SEC says that payment for order flow, PFOF, could be banned. At the same time, there's news that PayPal may be contemplating a stock trading platform. I've never thought, and I still don't think, that Robinhood stock is worth the paper it's printed on, in my humble opinion. Point number 4, LEO, low Earth orbit satellites, may be Apple's biggest win yet. News broke yesterday that Apple's new iPhone 13 could have satellite capability, and the stock took off like a rocket on reports like this one from The Verge, which you can read in my regular update. Now, incidentally, I mentioned the same thing during a presentation back in 2019 when I caught a whiff that Apple may have a top secret team working on satellite-based internet. Now, Bloomberg incidentally picked up on that story that year too. But here's the key. End-running mobile carriers is the real game, and it always has been. Point number 5, these chip makers could be a lot more valuable in the next 5 years. Chinese equity firm Wise Road Capital wants to buy Magnachip for $1.4 billion, and not surprisingly, the U.S. Treasury Department says the transaction, if allowed, is a national security risk. I agree entirely. And at the same time, it makes me think that Intel, Taiwan Semiconductor, and AMD could be a whole lot more valuable in the years ahead. Today's bottom line. People tell me frequently that they want lots of money, and that's fabulous. The problem is they don't have the right attitude about earning it, so they wind up cheating themselves out of achieving great results. You are worth it, but if you've got to make investments that are worth it too, I'll be with you every step of the way. Make it a great day. As always, I'll see you next time. Thank you for watching today's Morning 5 with Fitz. Click subscribe to get daily market notes right here on YouTube, or sign up for the email versions at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and more.